Today's topic is past paper question 2012 paper 2 module 1. So let's get right into it. Copy and complete the following table to show the differences between cost and management accounting and financial accounting. Use the six headings identified. Okay, so these are the six headings here, and cost management, financial. The users of information. Internal users use cost management accounting, like managers and accountants and so on. And financial accounting, on the other hand, are by external users, such as investors and shareholders and so on, people from outside of the organization. The use of information, decision making and planning for cost and management accounting mostly. Financial accounting is mostly for reporting, very little of decision making. Format of presentation of information. It's flexible for cost and management accounting. You can use whatever format or presentation you desire for anything. As and usually it's as the person require the information you presented that way to them. Uh, Financial accounting, on the other hand, is rigid. It follows GAAP, generally accepted accounting procedures, and the IES and legislation. The focus of the information is for cost and management accounting could be on the entire or part of the organization, could even be for a person. Financial accounting, the whole organization mostly is reported on. Nature of information, monetary or non-monetary. You could use for cost and management accounting. We could measure things in kilograms or centimeters or anything that other measure than money. And financial accounting is mostly monetary. Type of information, future planning for cost and management accounting. Most of it is concerned with budgeted information, predetermined stuff. Financial accounting, on the other hand, deals with historical matters that have taken place already. Classify each of the following costs and expenses for this company as either fixed or variable in relation to the number of units produced and sold. Sales commission would be variable, advertising fixed, packaging costs variable, CDs variable, salaries of customer support personnel fixed, property taxes on general office fixed. Okay, the next read what is required first. Calculate the cost of finished goods manufactured. Calculate the cost of goods sold. Okay. They are abbreviated form of the information normally given for a manufacturing account. They are the abbreviated form of the information normally given for a manufacturing account. For instance, here we have the cost of raw material use, the direct labor, and the overheads. These represent three sections in the manufacturing account. Then we have the work in progress and the finished goods, selling expenses. Okay, so we just need to arrange them and add them. Right, the direct material, direct labor, and the manufacturing overhead make up the total manufacturing cost. To that, we add the work in process at the beginning of the year, we less the work in process at the end of the year, and we get the cost of finished goods manufactured. Okay, the cost of goods sold, the opening inventory, the manufactured goods from here comes down to here, and then we minus the closing in inventory, and we get the cost of goods sold. Carl's Fast Food, which operates on Long Beach, prepares two types of sandwiches, the luxury and the standard. Okay, so it looks like as though this is a P-suite system. The luxury sandwich has a wide variety of fillings, while the standard sandwich is either cheese or flying fish. Carl currently pays its workers using the P-suite system. Present annual production, luxury sandwiches, 300,000 units, standard sandwiches, 450,000 units. Cost piece per sandwich, luxury, 25 cents, standard, 18. Okay, so this is how much you pay in the workers for uh, making the sandwich. The piece rate system, okay? And these are the number of sandwiches that you make for the month. So it asks us to calculate the cost of production 300,000 units of luxury sandwich and 450,000 units of standard sandwiches under the piece rate system. Okay, so that's the present annual production here. Okay, 300 luxury sandwiches at 25 cents would be $75,000. 450 standard sandwiches at 18 cents would be $81, giving a total of $156,000. Under the present system, Carl employs 30 persons with a normal working week of 40 hours. However, 8 weeks in the summer, when demand is high, overtime is paid at 250 per hour in addition to the normal piece rate. Weekly production during the summer 8 weeks. Luxury sandwiches 20,000, standard sandwiches 24,000 units. Estimated labor time per sandwich, luxury 3 minutes, standard 2 minutes. Calculate the total number of hours worked during summer. Uh, Total number of hours would be on luxury sandwiches 8 weeks by 20,000 by 3 minutes, and you divide it by 60 to bring it to hours. We get 8,000. Notice we took the 8 weeks. We did not take the 8 weeks and make it into hours because we are using a piece rate. Okay. Standard sandwiches 8 weeks by 24,000 will give us a number of sandwiches, and then we multiply it by 2, and we'll get the amount of time it takes to make that number of sandwiches. Divided by 60 will bring it to hours. 6,400. There are total hours of 14,400 hours to make these sandwiches here. Second part, calculate the overtime hours worked per week during the summer. Okay, the total hours would be these time it take to make this 20,000 units multiplied by 3 minutes divided by 60 to bring it to hours. 24,000 sandwiches by 2 minutes and divided by 60 to bring it to hours. We add the two together, we get 1800 hours. And we minus the normal hours from that. 30 workers by 40 hours. That's up here. That's the normal hours. We get 1200. Overtime hours, therefore, is 600 hours. Calculate the additional pay for labor over 8 weeks of the summer. The additional pay would be the overtime pay by 250 for 8 weeks. And it'll be $12,000. Okay. This other part is supposed to come on the other slide. Proposed system equal 12 staff by 12,000 equal $144,000. With the economic downturn, Carl is looking for ways to cut costs. He plans to reduce the production staff to 12 and pay each of them a monthly salary of $1,000 fixed, $12,000 annually. Under the proposed system, each employee would work 50 weeks at 40 hours per week and be paid $6 per hour. Okay? We multiply out this year, it also equals $12,000. Calculate the annual wages payable under the proposed system. Okay, the annual wages would be 12 staff by 12,000 equals 144,000. If we check it this way, we will get the same thing. 50 weeks at 40 hours is 2,000 and we multiply by 6, we'll get 12,000 hours, $12,000, sorry, at 12 workers, and that gives us 144,000 as well.